I'm John Kaiser at the Metals Investor Forum in Vancouver, January 2024. I am here with CEO Sandy McVey of Westvault Mining. Sandy, welcome to Vancouver.
Thanks for inviting us back, John, and I can't tell you how much we appreciate your coverage of our company.
Now, I had you in the May session last year, and you were my favorite optionality play, and I've done the numbers, and your stock's in this 90 cents to $1 range, and I do my discounted cash flow analysis. Say, well, this stock really should be trading, $1.50 to $2, and I crunched the numbers because you do have a feasibility study and all this stuff done, and if gold starts to move to 2,300 and beyond, we're talking about a $5 to $10 stock price. But you have a strategy that's different from many of these other, ounces in the ground type story. Can you recap what makes you different? Why anybody who buys you as an optionality play is not going to suffer dilution?
Well, I think the key thing is, as you say, differentiation. My job as CEO is we don't do any work on the project because it's all done, it's fully permitted. We're way beyond studies. They're in the rear view mirror now. We have a fully developed project execution plan and schedule, current prices, et cetera, et cetera. So the trick for me is to get the message across that there really aren't any questions here. You go drilling, are you going to find gold? You don't know. It's a big question. If you're developing a property, how's the metallurgy going to work out? All those things. Those are all questions which are now not relevant to us. The big question now is really, what do we do with this property? We could literally build it tomorrow. I'm a mining guy. I've built and constructed things all my career, and the plan I've put together is my plan should my boss say, okay, hotshot, go build it. So I've made sure that it's a very real world plan. This is not an arm wave. But we're not going to do that right now. We're a single project company. Probably the sensible thing in the interests of shareholders to protect their investment, and I emphasize the word investment rather than speculation, it is an investment, to protect their position, probably the best thing to do is to put this project into the hands of an experienced mine building, mine operating team. We're not that. I've got enough experience doing that to recognize we're not it. So, Kroger-Dunning effect in reverse, maybe, something like that. So differentiating, what is the story that we've got here? To my knowledge, there is no other property in a good jurisdiction like one of the good Western states, which is truly ready to build with a 51% after-tax IRR at $1,790 gold. It's very economically robust. It's got a very low entry initial capital of about 65 million US. That's a February 2023 figure, so it's a current figure. So we do sit in a unique position. And my challenge is to get that message across, to stand out from the noise, the background noise, if you like, of all the other junior mining companies, which are typically more speculative.
Yeah. Now, when I interviewed you, May last year, I was scratching my head. Why is this market not pricing this higher? It actually offers good speculative value. And then I realized you're only going to be producing about 70,000 ounces, if that number is correct, for about 9 years. And the producers tend to want a mine that's going to crank out 100,000 ounces a year. And you brought up a good point just now about how your project's actually ready. It's largely permitted to be done right away. And after that conference last year, you organized this great trip with a number of other companies like BlackRock and some for this whole Tonopah area. And I had never been there, and I was really impressed by all the potential in this area. I got toured all over, saw what Centerra's doing to the south, where the state even moved the freeway to allow them to plan building an open pit. And I said, this Walker Lane region, which has been sort of shunned in favor of the Carlin type Nevada gold in northern Nevada, which is now basically dominated by Barrick and Newmont through their joint venture. So there's going to be a revival of interest in epithermal gold systems, both high grade and these lower grade systems, especially if gold has a $2,000 as a floor rather than this endless ceiling. What is the potential for a consolidator, for example, Centerra or anybody else, finally taking this serious and saying, we're going to take out West Fault and make this the starter of reviving this entire area, Tonopah, where there is considerable community support for mining, as opposed to you go to near Bishop and that on the California border where it's absolutely recreation. You can pretty much give up developing anything there.
Sure. And that obviously is something that we think about a lot. What is the exit strategy? What is that exit event that would be what an investor is into Westville for? We believe we are undervalued at the moment. So there are maybe three broad ways that this could play out. One is that there is a producer who says, look, to get to whatever we want to get to in terms of production, whether it's 200,000 or 300,000 a year, 70,000 additional ounces, easy, ready to go, plug and play ounces, would be of interest to them. Another way of doing it is to say, well, look, there's a number of what I term stranded assets, and I hope the owners of those assets don't take offense, but smaller properties, smaller deposits, quite well understood, well drilled, well metallurgied, and this, that, and the other, but always going to be too small to be a mine, and not looking as if they could go bigger with drilling. And that's why I call them stranded assets. They got nowhere to go. It's an asset, but it's jammed. Now, if you got enough of those together and daisy chained them, now you could take Hasbrouck as the lead, put it into production, finish off the permitting on the first one of these pipeline projects, as I call them, and you got 2 or 3, you're at a 3, 4, 5 million ounce company, potentially. Somebody could do that. Then, more specifically, Centerra to the south of us, literally, you can see the Centerra property that you referenced at the town of Goldfield from the peak of Hasbrouck, our big pit. You get up there as we did last year.
Yeah, that was quite a hairy drive up to the top.
It was fun. So you can see the Gemfield property. It's 15 miles away, straight line. The highway runs and connects. They're literally the same mine. So we've got the first pit, 2 years at Three Hills, 5, 6 years at Hasbrouck, and then you've got 5 years at Gemfield property owned by Centerra. That makes a lot of sense, practically, as a mining guy. Now you're at 1 million ounce recoverable. You're at about 12, 13-year life of mine. You've just moved the Hasbrouck project into a different category of interest to another acquiring company. You're over that 1 million ounces that you talked about. So there's a third option. And I can't speak for Centerra other than to say what is public knowledge. They were very keen on getting hold of Gemfield. When they got it, they paid a goodly price for it, $206 million US. They went gung-ho drilling to expand the area, and currently all that activity has stopped, and they are focused on exploring on, I think they've got about 4 other properties in the United States, western states, that they're active drilling. Either they've bought outright or they're on earnings at the moment. But they're doing nothing at Gemfield. It could be that they say, look, it's not prospective. We've done a lot of drilling there, and we've got these other places which are more prospective, but we still have this pit, which is fully permitted, 43101 up the yin yang, and it's ready to go. That would be a good bolt-on. So it's really it's really up to Centerra what they want to do with it, but we would be open to that concept.
Now, when I stood on that hill, I realized, oh, you're talking about an open pit mine. Well, this looks really like a mountain removal mine type of thing. How much is there any exploration potential left at Hasbrouck or even Three Hills that somebody like a Centerra or similar coming in takes you out and then decides to spend a whole bunch of more money drilling? Is there potential? Is there room to make the resource bigger?
There always is. You know, it's the old saying, best place to find more gold is right next to where you're mining gold, right next to the mine, in the shadow of the hoist, is the old saying. So yes, we've got 1,300 acres, 1,000-acre property, I beg your pardon. Right next to us, when we were there last year, we heard Don McDowell talking about the prospecting and exploring he's doing on the contiguous property immediately to the east of us, called Tonopah Divide Mining Company. It's Gold Mountain. There's something there. Don is very keen to go and find something. And whatever he finds, that will almost automatically be us. We will take that. Say, for example, he finds a good deposit, 200,000 ounces. Again, too small to be a mine on its own. One buyer, one potential buyer, us, puts us kind of in the driving seat for a negotiation on that. So we are strongly encouraging him to find something there. So as far as Centerra is concerned, they've got a big land package 15 miles to the south. We've got a big land package, the 12,000 acres here. Don McDowell's got about the same amount immediately to the east of us. There's this big collapsed caldera there that Don McDowell's looking at. It's a big heat source. Might be something there.
Okay, so that would be probably the one deviation from your strategy of let's just sit and wait.
Yes.
If something evolves right next door, you're the obvious one to acquire that and incorporate it into your story. But what is the risk that some other predatory company that also wants to be just an optionality holder of these future deposits comes in and makes a hostile bid at $1.25 with their overpriced paper? Is there a risk that you're going to suddenly vanish because people say, yeah, this is better than sitting at 90 cents to a dollar waiting for gold to finally make a move?
There is zero risk of that happening for one reason. 46% of the company is owned by a gold fund called Sun Valley Gold. The president of that company is my boss. He's chairman of Westvault Mining. And he doesn't have to ask anybody whether he should contemplate such a hostile thing. He just say no. He's got 46% of the company. And I should say that, so he's at about 50%. 25% in addition to that is also held by other institutions, Sprott, Gold 2000, and so on. So we have about 25% retail. So no, that cannot happen.
Yeah, so your stock's the perfect type of stock to just buy and forget about it. And on that crazy day when gold finally breaks out, your stock's just going to adjust. It'll be too late to chase it. So that's the reason people need to buy Westvault Mining now as their leveraged bet on gold finally getting a life above $2,000.
Nicely put. Thank you, John. And to reinforce that, because of the noise, and God bless them, we need the people to go exploring and being very optimistic about that and doing what they do. Glamis, I could reference that. In 2016, Glamis was bought by, I think it was Gold Corp, in August for $16. In January of that year, they were at $2.
2006.
2006. I beg your pardon. Thank you. You've got a memory like a steel trap, John. Thank you for that. Silver Standard, SSR, as they now are, that was their strategy. Acquire good deposits, and time will do the work for you. Ross Beatty with Lumina Copper back in 2000 and whatever it
Yeah, he
was.
started, around 1999, 2000, before people knew that the China super cycle was happening.
But the one thing that Ross says is, it's the cycle, stupid. If you don't let the cycle do the work for you, you're not going to do very well in mining. And you have to know where you are in the cycle. We believe we're at the bottom of the cycle, or not very high. The cycle is going to go higher going forward. And that's what Ross did. That's how he got the name of the broken slot machine. Yeah. He bought copper when it was at 30 cents a pound, knowing that it was at the bottom of the cycle. So what we're doing is not a new strategy. It's just a strategy that is a little bit of a slower go, a less exciting story than somebody who's got an exploration property.
Mm-hmm. Thank you, Sandy. I've been speaking with Sandy McVey of West Volta Mining. It's good to have you here in Vancouver again.